Does this correction have further to go?
Well, it's still the third quarter, okay? And once again, the seasonals right now are just not particularly great. So as I said at the beginning, I think we're going to stay in this range. I find it hard to believe we're going to break out back towards the highs. I also don't think we're going to completely break down in a way that would argue that we're entering a new, bear market, okay? But the lower end of the range is, to me, the magnet now, because that's where the valuation support really lies. 19 times, it's closer to the low end of that range.
You said you're focused on jobless claims. I talked to Ed Hyman on Sunday from ISI. He said the same thing. If we get a labor market that really weakens, and the SOM rule's already been triggered, but if we get, for example, I think September 6th, we get non-farm payrolls, and if we get another jump up in unemployment to 4.6%, do you think we see more mayhem in the markets?
Yes. I mean, a 4.6 would be pretty definitive. Now, just to be clear, our economics house call is still we're in a soft landing outcome. What I would suggest, though, is that the market is priced for that, right? The market is priced for a soft, actually even better than a soft landing outcome. It's priced for a reacceleration. So just kind of putting a little risk back into the market that maybe the hard landing is no longer zero, but it's 20 or 30% again, that once again just argues that multiples will probably bleed lower into September, even if the jobs data is kind of stable. Because at the end of the day, the jobs market is weakening. And so how could you sit here and say that the risk of a recession is zero, which is kind of what's priced in the equity market? And one last thing, the bond market is definitely pricing a higher risk of a hard landing. I mean, that's what the yield curve's telling you. That's what the 2-year yield versus the Fed funds is telling you.
Does that divergence worry you as an equity?
Well, I'm just saying as an equity person, you should pay attention. I mean, the bond market has probably a better look at, okay, what is the risk here? The bond market's not saying recession, to be clear. It's saying the risk of a recession has gone up in the last 2 months, which makes sense given what you just said.